Welcome to the first ever SEM University online course. My name is Jeff Hybeck. I'm the Senior Portfolio Manager at Strategic Equity Management. I hold a Bachelor of Science degree with an emphasis in finance from the University of Northern Colorado. And the goal today is to make economics simple, something that everybody can understand because it has such a big influence on the stock market and on our daily lives. First of all, let me be right up front with everybody. I got C's in economics in college. Now, a lot of you might be saying, why in the world would we listen to you? Hopefully you're still listening. But let me explain why I got C's in economics. I'm very good at math. I'm very analytical. I love working with numbers. I've worked with numbers my entire life. And when I got to college, I was a bit surprised to find out that economics was not offered through the College of Business, but it was offered through the Liberal Arts College. And that is one key designation there. Economics is an art. We've heard a lot over the last few years about Keynesian economics, about different economic policies, especially coming out of Congress and the Federal Reserve, and everybody is talking about, well, this is just sound economic policy, but we have to understand economics is an art. The reason I struggled so much when I took these economics courses was there was no real mathematical model that could be developed to measure how the economy would function. It was a lot of theories, a lot of things that really couldn't be tested in the real world because they didn't have the numbers to back it up. Well, since I graduated and I took the job here at Strategic Equity, I've finished a project that I actually started in college, in the College of Finance, which was how can we model the economy and develop some mathematical formulas that help us to better understand where the economy is going. And through that, I gained a much greater understanding of how economics worked, and I really wish that my professors in college had been able to explain them in a much more simplistic fashion, because when you're trying to understand a difficult subject, I've found it's easiest to simplify things and then go out into the real world and then try to figure out and apply them and then go back to study some more. And that's kind of what I've done throughout my 13-year career here at Strategic Equity. So let's jump right in. What are economics? It's basically the study of how society allocates scarce resources and goods. There's a couple key phrases in there: resources and goods. So let's see what those have, what the definition of those are. Resources are basically the inputs that are going to be used in our society. Some of those examples are labor, capital, which would be money, equipment, land, anything that is required to produce things. And in economics terms, it needs to be something that is scarce. In other words, you can't say, well, we need air to breathe, so that's a resource. Well, it technically is a resource, but in economics, we want to talk about things that are limited in nature. The other important definition are goods. Now, these are products that are produced by the economy, very simply. And we've seen over the last 70 or 80 years, our economy has evolved from a manufacturing economy where we did produce goods you could hold in your hand and touch, and we've shifted quite a bit to a service model. So in economic definitions, goods would also include services such as those provided by a barber, a doctor, a dentist, investment advisors like me, police officers. Those types of things are all outputs from the resources. In other words, the economy produces all goods and services, and that's what we're trying to measure. So let's look at Economics 101, just a simple economic model. Now, in each of these models that we show, the green line is the capital, the money flow, whereas the purple line there is something that is being given or produced. So let's look at individuals. A business hires an individual. So that individual is giving the business their resource of labor, while the business in turn pays for the resource with the money. Now, a business then generates a good or a service. They sell it to the individuals and they get money in return. So in a perfectly balanced world, this would be good enough for the individuals, and the businesses could regulate each other. You'd see some balance. You would see everything functioning properly. But of course, the world isn't that simple, and we all know the world is not perfect. So let's move to Economics 201. And that's where we get the government involved. And most people consider this a better economic model because, unfortunately, human nature has been that we haven't been good at regulating everything. And you do need the government to stand in and fulfill some things like defense or, well, maybe defense. I'm trying to think of anything else that the government can provide. There's some regulations that have been good, obviously. Civil rights and things like that, where they've stood to protect the little guy. The government does need to play a role. So when you add the government into this model, obviously they have to be funded somehow. So they're going to have to take in money. And then the government turns around and they actually give out money, whether it's tax credits, subsidies, or just outright direct payments to both businesses and individuals. And then, of course, you have the government also buying goods and services from the business. And on the other side, on the left there, they employ individuals. And so that really adds some complexity to the economic model because it's no longer just between individuals and businesses. You have the government in between there, but you still have the businesses and individuals doing business directly with each other. Now, if the flow of funds inside of the government, if all those green arrows were equal and balanced, this model would work great, and we could stop with our Economics 201 lesson. However, let's move on to government economics, our 301 class. Now here is basically what our current economic model looks like, and you could see the problem right there. It's the center of the screen. Those arrows coming out of the government, which again the green is cash, they're too big. It's not balanced off by the money coming in to the government. Now we could also make things bigger as far as how many resources the government's employing versus how much they're paying. We don't have time to go into all of that. How much the government actually pays for goods and what they're truly getting in return. We've seen a lot of the audits that are done by the CBO, and we know that the government is not very efficient. But to keep things simple for this 301 class, we have to understand that because the government for 30 years has not balanced the payments between what they're taking in and what they're paying out, it doesn't work anymore. Now, many academics in this field believe that this imbalance is necessary during economic contractions because they believe that the government can then make up for the imbalance by reversing it, by having more money coming in than going out during the years of economic expansion. But the problem is, for 30 years, this hasn't been the case. And so now that means we're going to have to move on to advanced economics. This is our highest level class that we offer here at Strategic Equity. And it is a 401 class, but we have to keep in mind some things. In our 401 class, we're going to study how to pay for this economic imbalance that was created when the government began interfering with our simple economic model. Now, some of the prerequisites: we cannot accept anybody in this class that got anything above a D in Economics 101 and 201. Also, if you want to get into our 401 class, you have to have passed Economics 301. That's the one that includes the government imbalance with an A+. Anybody with a GPA of 2.0 or lower in all math classes are the only ones we'll consider letting into this 401 class. Honors students certainly cannot take this advanced economics class. You also must have completed 12 credit hours of creative thinking courses, because we're going to have to really expand our brains to figure out how to take care of this imbalance. And although not required, we do recommend a beard. If you've seen a picture of the Fed chairman Ben Bernanke, he has a very nice beard. And I think to really understand advanced economics, it helps to have a beard, although it's not going to be required. And furthermore, we must warn you, if you bring a calculator to this course, you will receive a failing grade. So let's take a look at advanced economics. Now remember, our government has created an imbalance because they chose not to get back to equilibrium by either increasing the income or reducing the expenses during the good times. So now our closed system that we had that was working rather well has to be opened up to outside parties. Now, the first thing we have to worry about is how to fund our government. So we're going to fund this imbalance by getting money from these outside investors via treasury bonds. And you could see those outside investors are going to receive treasury bonds issued by us, and they're going to give us money so that our government can function. The problem is we're going to have to pay out interest on those. So now the money no longer stays completely inside of our closed economy. It's going to outside sources. Now, because of the issue of time, we're not going to be able to talk about some of these other imbalances. That's for our 402 class. If you also realize that this closed system doesn't work any longer because the United States is running a trade imbalance where we import far more than we export. So you all of a sudden have individuals, you could just replace treasury bonds with foreign goods and services, and outside investors with outside countries, like China especially. And so we have a lot of money flowing out to China in return for goods and services that may not be the best quality. But that again is for our 402 class. So keep this in mind now as we look at a real life example of our current global economic system. Here you go. Now, the United States government box, that blue and red one there, down here on the bottom, this is how complex it gets when we have to come up with funding. And now remember, this model is not perfect, and once again I must caution you, you cannot use a calculator in this course to fully understand it. And I'm just going to leave it up there for a little bit. On our blog, we have an article called The Global Financial System where we detail some of this stuff. I would encourage you, if you want to look at this further, we include this in a JPEG format so you can download it and view it yourself. It's something that we all have to understand, that there's no easy answers anymore. The money flowing back and forth, just trying to keep our financial system going is just unbelievable. And so whenever you hear about a solution to the financial crisis in Europe, you got to look back at this flowchart and realize where the money's coming from. Because almost every country in the world is heavily indebted, and they're borrowing money from each other, and it just doesn't work anymore. At some point, they're going to run out of money. Now, we see off to the right, a lot of the central banks have turned to Uranus. I'm sorry, excuse me, I guess the pronunciation now is Uranus. But when I was in school, we called it Uranus. And that appears to be where the central banks are getting the money. And not included in this flowchart is something we have to go back to 2011 to remember, is when the central banks turn to Uranus to help keep this system going, it causes unforeseen circumstances, excuse me. And one of those circumstances is inflation. And it creates things like we saw in the Occupy Wall Street movement, because the Federal Reserve then turns around and gives money to the U.S. banks, and they give it to the EU banks, and they give it to the European Central Bank. And everybody who has to pay for it, those living paycheck to paycheck, or the taxpayers, they're the ones that bear the real burden of this global financial system. So it's definitely a broken system, but it's something that only those that don't use calculators, only those who have passed this advanced economics course truly understand. So if you don't understand it, you probably got an A or a B in math. You probably know how to work a calculator. So, for that, I apologize. You people that can think for yourself will never get an A in advanced economics. Now let's move on to another course of ours and that's the European economics. And again, we have this on our blog at stratequity.com, and it's an article called The Debt Ponzi Scheme. And this again shows the complexity of our global financial system, but let's just simplify it, and let's take a look at the actual money that's being lent back and forth inside the European Union. Let's start with, off sort of in the middle of the page and look at Italy. They've been making a lot of headlines recently, and notice the purple box in Italy. That's how much money Italy has borrowed from France. So now let's jump off to the far right and look at France. Now, not only has France borrowed a little bit of money from Italy, look at some of these other purple boxes in the countries that France has lent money to. We have Spain, who of course is struggling to make payments on their debt. We have Portugal, who's already had to be bailed out. Still have Italy. We have Ireland, who's also needed bailed out, and Greece. And France has even lent money to Germany. But for this illustration, let's just stick with the fact that France has lent money to Greece, Ireland, Italy, Portugal, and Spain. Now, that at some point is going to cause a problem for France. So who has France borrowed money from? You could see the United States is one of the biggest lenders to France, if you go all the way to the left there. You could see that we have Germany has again lent money to France. And then of course you have the United Kingdom again lending money to France. So now let's go over to the left side of the page and look at the United States and the United Kingdom. And you could see the money going back and forth between the US and the UK. You could see that Germany is one of the primary people lending money to both of those countries. So to me, this is the definition of a Ponzi scheme, because you just have money floating around, going back and forth. It's paper money going between countries, but eventually, as one country has a problem, it's going to filter to the next country, and so on and so forth. Now, to look at a different way, let's look at the money that has been loaned to the EU members by each of the different countries. You could see that the United States and the United Kingdom only trails France as far as the amount of euros that they have lent to the EU members. But then let's go over to the right side of the graph there, and let's look at how much we borrowed from the EU members. So if you think about it, when the EU members have problems, they're not going to be able to buy bonds from other countries. And you could see that the US and the UK have relied very heavily on borrowing from the EU countries, to the extent that both countries risk losing a major source of funding for our broken financial system if the problems continue in the European Union. So that's why Europe matters, and that's the one thing that could really screw up 2012, is if we see the ability for the US to borrow from the European Union, and we start to see losses in the US banking system from all these loans to the EU members, all this recovery that we've been focusing on in the first half of this presentation is gone. Because in this broken financial system, it's no longer closed. Everything is connected, and it's, again, my definition of a Ponzi scheme, and it's something that must be fixed. We've covered a lot in today's presentation, so if you found something that maybe you want a little bit more information on, maybe you want to take a look at some of the charts that were included in today's lesson, I would encourage you to go to our website. It's stratequity.com. It's free registration, whether you're an investment professional or an individual trying to learn more about the markets and the economy. Just click on the appropriate link there. And then once you've verified your email address, again, we're not going to spam you. It's free of charge. All it is to verify that you're a real person. You verify that you are a real person, and then you log back in, and you can check out our website. I mentioned our blog. There off to the side will be something that says Trading Desk Updates. You click on there, and it takes you to Our blog, there's going to be a search screen. You can search for different topics and that sort of thing. So I hope you found today's lesson useful. It's something that we all need to understand as we move forward. We've kind of gotten into a economic mess, and a lot of it is because we as individuals have not been educated about it. So I hope you can use this information in your daily lives, and we'll talk to you soon.